What is a rate buy down? So when you are given an interest rate, there are numbers to the left and right of that. So the way I explain it is interest rates are on a spectrum, let's say from 2% to 8%. And your down payment, your credit score, what loan program you go with, that dictates where you fall on that number line, sort of organically. That is what we call par. Par, like in golf, it means there's no cost. It's zero. So it's where you just happen to fall on that number line. A rate buy down is saying, I don't want par. I want a lower rate than that, whatever it is. So let's say par for you is 6%, but you really, really, really want a 5% interest rate. You can do that and you can have a 5% interest rate, but there's going to be increased costs to do that. So you are buying down your interest rate, and the benefit to doing that is saying, well, I'll give you $5,000 now to buy down my interest rate. And obviously that is worth it because over 30 years, the difference between 6% and 5% could be a ton in savings. So it's worth it to buy down your interest rate. On the other end of the spectrum though, let's say again, you're starting at 6%. If you said, I want a 7% interest rate, you can do that, you can have that. But at that interest rate level, you might actually get a credit towards your closing costs. So the lender is going to give you an interest rate, and on one side of the spectrum, you can increase your costs and lower your monthly mortgage payment, lower your interest rate. On the other end of the spectrum, you can take a higher rate, and the lender will give you money to take that higher interest rate. The reason you would want to do that is like maybe you were light on cash to close. You didn't have enough money to close, and so you kind of slip into a higher interest rate to help cover that bill. So again, it just depends on what you want to do. But buying your interest rate down is a big question right now because everybody has an issue with interest rates. And again, it just depends on how much and how long it's going to take us to recoup that benefit.